What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Palo Alto stock, ticker symbol PANW, on a variety of time frames in anticipation of the next trading day, Thursday, March 7th. All right, guys, PANW stock here today, down $12.27 a share. That's 4.21% to the downside. The majority of that move actually coming off of the open. So let's take a look and see what kind of bias and psychological and technical levels we can pull out of the market today. And then also I want to take a look at how the options traders are positioning themselves heading in to Thursday, or how they did position themselves today. And let's start here with our daily volume profile analysis ritual on a day like today. It's incredibly necessary, I think. Here on the best chart to do that, in my opinion, the 5-minute chart. If you have not done so already, please subscribe to the channel. My goal is to hit 5,000. I appreciate you climbing aboard, and I'll do my best to continue to provide you free value each and every day here. So what I'm looking at here on the 5-minute chart, guys, I want to see big changes in volume that are not contextual to that particular time of day. Okay, that's very crucial. It has to be outside of the scope of what we would typically expect at that time of day. But it also has to correlate, of course, with an obvious move in stock price. So really here today on PANW, what I'm primarily looking at is going to be this downside move here that we had off of the open, obviously including that first candle. And interestingly, this was right off of $300 a share. So let's take a look at the volume profile and now understand bulls. If you're in chat rooms, if you're in our free Discord this evening, for example, you may see some bears discussing this opening move on that volume and boasting about how, wow, they really won that open. And granted, in terms of stock price, it's hard to deny that the bears won that open. However, this is a different conversation when we're looking at volume profile. We're trying to look at sample size. What was it an overwhelming sample size of market participants at that time that agreed that the stock belonged lower, or was it simply driven on what's kind of average volume for that time of day? And truthfully, this is not out of the context for an open. If this had broken 1 million shares of volume at least on that opening candle, I think that would be in the conversation. But this is within reason for what's a reasonable volume profile off of the open. And volume faded incredibly quickly, by the way. If we had seen, 500,000 shares for 4 or 5-minute bars in a row, that would be a different story, but we didn't see that at all. It faded incredibly quickly. So, bears, I apologize. I wish I had different news for you, but I have to call this 5-minute a wash. But of course, the bears, in terms of price movement, they did win that opening section of the day. But, in terms of the volume profile, it is contextual. So it's hard to make that argument, I think. Let's move on now to the 30-minute chart and start taking a look at very psychological, self-fulfilling prophecy levels that I'm going to be paying very close attention to here tomorrow. Now, here on the 30-minute, that white line is going to be the 50 period. That gray line is going to be the 200 period moving average. I'm only using those because they are the most popular. That's the only reason I'm interested, right? They're psychological. There's a lot of decisions being made around those levels from a whole lot of eyeballs. That 50 period is about 4.6%. 4.6% upside move away from where the stock currently is. So bulls, that's well within a single day's move in for this stock, right? We've seen crazier things. It was 4.2% today. So bulls, ideally, and we also have to expect that this may also push downside tomorrow, making that move even less of a move required to get upside. Bulls, I would love to see a reclaim of that 50 period here on the 30-minute tomorrow. And I would love to see that occur on higher volume. Bears, really simple for you guys. Of course, any upside test, you're going to want to see a hard, high volume rejection. But you don't really want to see an upside test at all, considering it is about a 4% move. So you just want to see flat or continuation downside movement out of the stock. But what you're really looking at in particular on the 30-minute chart is going to be that 50 period to continue pushing lower at, ideally for you, an accelerating rate to the downside if you're a bear. All right, let's now move on to the 4-hour chart and take a look here. You can see that just recently, this 50 period has been very much so in play. Found ourselves right below about $300 a share on that, and it's about 7.3%, a 7.3% upside move away currently. Now, by the way, if you're confused about that percentage and you're looking at this chart and it's not really adding up from, a 7% move to that 50 period, and we were down 4.2% compared to yesterday, Tuesday, how does that make sense? Remember that we had that big after hours move on Tuesday, pushing above $300 a share, and then the fade here this morning. So that's the 4-hour chart with this second 4-hour candle is sometimes going to reflect after hours movement. So bulls here on the 4-hour here tomorrow, okay? That is a big move, okay? Would I love to see a reclaim of that? Absolutely, because that would mean we're back close to $300 a share. But honestly, just being more reasonable for a single day, okay, tomorrow, again, I would love to see a reclaim of that. That would be a beautiful thing if you're a bull. But really on the 4-hour, just anything except for the 50 period curling over to the downside and making an aggressive downside move like down through 290 a share, I'm cool with that as a bull. Okay, I just don't want psychological barriers moving lower, multiple at once. Whereas if you're a bear, your best case scenario here tomorrow would be to see this 4-hour crack down and head down toward, if not below, $290 a share, because that's just another psychological barrier back to the upside. Now, let's take a look at the most contextual chart of all, which is going to be the daily. Okay, this is going to be the most important chart. Typically, you can see that we're currently between the 200-day moving average and the 50-day moving average, but it's a relatively wide channel. Compared to where the stock is right now, again, this is the daily. It's not going to show after-hours movement. All right, but where the stock closed approximately to that 50-day is about a 4.6% move to the downside. So, of course, any downside test of that, bulls going to want to see a really clean bounce like we saw after that earnings report, okay, similar to that. But really, I think the most obvious story as we head into tomorrow is really the story of that psychological roundish number of about 280 a share. So bulls, a bounce and a hold of 280 a share and using that as kind of a trampoline to work our way back up to 290, heading back up toward $300 a share. That would be a beautiful sight. Just closing above 280, maybe even 285, 290. That would be a great, great thing to see. Whereas bears, your ideal scenario is a retest, if we get a retest at all, of 280, and then a hard high volume rejection continuing downside toward that 200-day moving average here on the daily. Now, all that being said, let's take a look at how the options traders positioned themselves today in terms of bias as we head into tomorrow, Thursday. So we had 237,000 total contracts traded. That's a great sample size. 134,000 calls approximately, and about 103,000 puts. That is a call side bias on the overall call put ratio. And if we break this down by time frame, you can see here that the one that I'm primarily interested in, that 0 to 20 delta range, which is going to be the short-term speculators, right? You can almost argue like the shorter-term gamblers, because those are those gambly style speculative calls and puts, very far out of the money on average, really short dated. 67,100 calls and 54,000 puts. So this ratio, I wouldn't say it's overwhelmingly leaning to the call side by any means, but we are seeing a call heavy ratio in both the overall ratio and the short-term speculator ratio of that 0 to 20 delta range. Listen, if you got value out of this video, please subscribe to the channel. I greatly appreciate you jumping aboard, and I'll see you in the next one.